Hey there. This is a finance related podcast. So, in this podcast, we're going to take a look at three companies, right? They're sort of in the same space. We're going to look at them, but they're similar yet different from each other. Oracle is one of the companies. We're going to look at Snowflake, compare and contrast with Oracle. We're also going to take a look at Datadog, right? So, we're going to look at these three companies. Just look at what's happening, what business they are in if you don't already know, what kind of news there, what recent news applies to, is applicable to each of these companies, how they have generally been performing in the stock market in the last so many months or so, and then we'll spend some time spend a little bit of time looking at those types of things. So let me actually let me. I think I had a search here. Okay, so let me make sure I'm doing a screen share. Yeah. So Datadog, the ticker symbol is DDOG, Snowflake SNOW, and Oracle ORCL. So those are the three companies. I'm going to read out what Google says here, and then we'll look at some numbers and the metrics and whatnot, right? So what's the similarity, right? They operate in the cloud computing and data analytics space, as it says here, but their services are quite different from each other. Now, Oracle, as you know, is primarily or has primarily been a database company, but they have a lot of products, right? Enterprise software products, and they've made several acquisitions over the years. So hopefully you are familiar with Oracle as a company. Now they've been in the news a lot more recently because their CEO, the founder, Larry Ellison, was the richest man in the world for a day or two before it was back to the default Elon Musk. That was a few months ago after they reported their last earnings, where they did very, they spiked, and we look at the numbers shortly. So that's essentially, they've been in the news because they've been collaborating with OpenAI. OpenAI is expecting to make a lot of investments in Oracle. As to where they're going to get that money from, only time has to tell. But that's the expectation. So there's a lot of news around that in terms of what Oracle's what do they call it? Remaining performance obligations, RPO, if I'm not wrong. Let me see. RPO for companies. RPOs remaining performance obligations, which is, I believe, companies or their customers having made commitments, but they haven't the company hasn't received that money yet, right? Sort of like outstanding dues, but it's money that's to come in future, essentially. So that they reported like hundreds of billions of dollars as RPO Oracle, which is why they had actually initially gone up quite a bit. The next company, okay, let me expand this. Snowflake, it's a data warehousing company, data warehousing, data lakes, and so on and so forth. So if you're not familiar with Snowflake, we can probably spend a few minutes so you can check them out. Good company, great product. They've been doing quite well. And if you are dealing with unstructured data, especially data for AI, then Snowflake is probably something you're either already using or seriously considering. Last but not least, Datadog, one of my favorite companies. They are in the observability and monitoring space. So if you're using, no matter what product it is that you're using, if you want to be able to debug it quickly in production at runtime, Datadog provides a plethora of tools to be able to get to the bottom of those issues as quickly as you can. Now, to facilitate that, you have to start using Datadog while you're actually building software. We won't go into those details here, but it's a great product, and I believe they're headquartered not too far from where I live in New York City. Good company, right? They are in the monitoring and observability space, much like Dynatrace and New Relic and companies of those are probably their competitors, right? So those are the three companies we're going to take a look at. So let's start with the last one, Datadog. So to get a sense of a company, it's best to look at their customers and their competitors. Customers, they're probably going to have a long list of customers. So I don't know for Datadog if it's a sensible thing to pull up. Yeah, I know that a lot of Fortune 500 companies, as it says here, are using Datadog. So if you have software, complex software, and you want to be able to observe that, in production and other environments, then Datadog is a great tool to actually integrate. So rather than customers, because they're going to have a whole lot of them, let's go to competitors. I mentioned a couple. Dynatrace, I said that. New Relic, so those are the top two. And we have Elastic, App Dynamics, and some others here. But these, I would say, are probably the top two big competitors. Oh, yeah, of course. AWS CloudWatch. Now, AWS CloudWatch is something you're using if you're an AWS vendor or somebody who's using AWS essentially, like us at Snowpal, which is thousands and hundreds of thousands of companies possibly too, right? But that's if you are in the AWS ecosystem. Whereas if you're not, or if you also use other cloud providers and whatnot, then you want something that's sitting outside AWS. In that case, something like Datadog is going to be quite nice. I don't know why MongoDB is showing up here. I don't see them as a competitor to Datadog, but I know, yeah, because you can have, you are actually using Datadog to monitor something like MongoDB, and it's in production. Maybe it's a competitor because MongoDB also provides their own services. So if you don't use that, you can use Datadog in lieu of that. So perhaps in that sense, maybe they are a competitor, right? So that's Datadog introduction to you. Let's look at Snowflake's customers. I'm sure there's going to be a big list as well. Yep, a lot of these Fortune 500 companies. It says J.P. Morgan, Apple, Netflix, Siemens, and whatnot. Companies across different sectors and categories. Blah blah blah. How they use Snowflake, building AI chatbots, AI and machine learning as a category. Data sharing. It says modernization and data governance. So the Snowflake data. Data lake, yeah. So data warehousing and data lake, they're different, right? I mean, you can look it up as to what the differences are. Data warehouse is generally for structured content. Data lake is for unstructured content, right? Or I guess it says, what is it? A Snowflake leverages the data cloud to store all data types. It can include structured, but it is very good to do manage unstructured content. So they have, if you're using data lakes, Snowflake is probably one of the top companies in that space. So let's look at their competitors. I don't know if Mongo would show up there. Oh yeah, Databricks. Databricks is probably their primary competitor because they are in that space of data, lakes, lake as well. And it's a great company, right? We'll probably do a podcast. We'll do some hands-on stuff with all of these companies. But yeah, that's a great company. Databricks. I don't know if they've gone IPO or they're gonna go IPO soon, but they are a great company. Um, it is key competitors: Google's BigQuery, Amazon Redshift. So there are some hyperscalers that are competitors, and then they're seeing traditional players as well, right? So that's as far as competition is concerned. They offer some great products, and if you're building AI tools, Snowflake is probably something you're likely already using or thinking about using. And last but not least, in the other direction, I mean, I don't think we should go to Oracle customers. Probably the whole world is going to show up there. In terms of competitors, any database provider, right? So it's going to show, Azure, AWS, and within AWS, there's like so many different databases. They have Mongo and whatnot. So from a database standpoint, those are the competitors, but they've been in the news not so much for the databases, but for the Oracle Cloud Infrastructure (OCI) and how they're going to partner with OpenAI and hopefully make a ton of money in that space to become one of the cloud providers other than AWS, Google Cloud, and Azure, right? So those three are the three big players, and they've been the biggest players for a long time. Where I think AWS is number one with over 30 some percent market share. Google, I think Azure is next, and probably followed by Google Cloud, if I'm not wrong, right? But Oracle was expected, or maybe is still expected to be the fourth in that list, which is why they've been in the news. So that's by way of introduction to these companies if you did not already know them. Now let's look at some financial metrics for all three of them. Let's start with Datadog because they did not have a great day in the market today. Yeah, if you see here, yeah, today they dropped like about 7.5% today, and I mean, this is not financial advice, obviously, and this is purely for entertainment. But I think they are, in my opinion, I like that price actually, right? So if you look at the last 1 year, they're down about 8%. So everything that they have lost today is with what they have lost for the whole year. Otherwise, it looks like they were broken even the last 12 months. And sometime in November, I mean, they actually made it into the S&P, if I'm not wrong, somewhere around here, July, which is when they spiked all the way up to $155 from like during the tariff down of $90. So that's like what, $60, over 60% increase in a couple of months. And then couple of months back in November, they went up to almost $200, right? I think they hit the midday high, intraday high of $200, and they've dropped $70 since, right? In the last 2 months, they've dropped 35%, right? That's quite a bit of a drop. So the next earnings is going to be, yeah, it's coming up next month. I don't know. I think, if you ask me, I mean, there is the short interest. There's a decent bit of outstanding short shares there, and their forward P ratio is high, right? It's 70. So yeah, they're not. I mean, they're probably richly valued, but they're at, I've seen them at $130 for a long time. So this is kind of a price where someone like me might consider entering into a position, right? It's just me. Uh, so that's Datadog, just to get a sense of where they are at. About $50 billion company, and they have a decent trading volume of 5 million shares a day. Let's look at Oracle. 10 times bigger, $500 billion. The short interest is just 1%, so there's not a lot of people shorting it, obviously. Their forward P ratio is 26. But I don't know if they're not, I don't know if they come under the category of a high growth company. So 26 is not it's a decent number, but maybe not low enough for a company that has not necessarily shown that much growth. Let's see, in the last 5 years, well, I take it back. They've gone up like 200% in the last 5 years, and 16% in the last 1 year. Datadog has gone up only 30% in the last 5 years. Wow. Yeah. I mean, that's quite bad, right? 30% in the last 5 years. Yeah, I don't know what to say there. So Oracle's done rather well. Oops, hang on. Let me go to Oracle. 200% over the last 5 years and 16%. They actually, were close to 800 or $900 billion. They were going to hit $1 trillion when they went to $345. Was it like, what, 3 months ago? Yeah, around the September timeframe when they reported earnings last. I think their last earnings. Oh no, the last earnings date. No, no, the earnings prior to the last one. The last one they actually plunged. The one before that, right? They went to $345 and now down to $190, right? That's, oh my god. And they were like about $170 few week or so back. So they dropped 50%, right? 50% in value. And this is for not like a meme stock, right? We're not talking GameStop here. We're talking Oracle, a very solid product company. So you've got to be careful. That's why the stock market is not for the faint of heart. Even a company like Oracle can actually drop a whole 50% within a matter of a couple of months, right? That's scary if you think about it. Um, so yeah, their forward P ratios is actually not bad, but I don't know how you compare that to a company that's not necessarily a high growth company. So if you believe that OpenAI is going to have all the money that they hope to have to be able to invest in all of these companies, one of them being Oracle, and then you believe in the remaining performance obligation, the RPO, which runs into hundreds of billions of dollars over the next 5 years, then maybe Oracle is a company that you want to perhaps look into. I'm not exactly certain. I'm waiting for a pullback that's a bit more than this, but it's getting to a point where it's actually becoming attractive. Because if you see the last, well, at the top of last year, they were $172, and then they dropped to 139, went up all the way, and then they back down here. So they are probably at a decent point, right? And then what is the last one that we want to look at? Snowflake. Snowflake, look at the forward P, it's close to 200. So clearly, a lot of it is probably baked into the price already. They are expensive, no doubt about that. They're about $80 billion company, just close to the Datadog market cap. The short interest is 3.5%. Right now, what was it for Datadog? Was it? Yeah, it's 2.5. So it's much higher, much higher. So people are, we can look at the outstanding short number of shares and how many days there are, the folks have before they need to cover some of those positions. But that's a pretty high number. Now, again, if you look at it, they've gone up 40% in the last year. The last 5 years, they are down actually 25%. So someone who invested in Snowflake 5 years ago would be 25% in the red, which is a bad place to be in. And if you look at the last 1 year, they actually went up all the way $274. The 52-week range shows at 280 over here. So again, about 2 months back, they were $50 more than this, which means they've dropped about 20% since then. Um, so they're not as high as they were, but I think they are still pretty high. Year to date, it's too soon into the year, so I'm not looking at that number. So the PE forward PE ratio is high. We're just looking at one of the financial metrics in this podcast, but take it for what it's worth. So they are not cheap by any stretch of the imagination. But if you believe, this is considered one of those high growth companies, so it's going to be rather volatile. There's a lot of action. It is also a good day trading stock if you like the kind of action that it provides. But the price may or may not be there yet. So before we close this, let's just go to tip ranks. Again, take these analyst ratings with more than a grain of salt, but just for curiosity's sakes, it shows Datadog as having 60% upside, Oracle as having 60% upside as well, and Snowflake as having 27% upside. So that's what tip ranks is saying. But again, if you probably know that these analyst forecasts are subject to change all the time. It's based on news and rumors and whatnot, so it could change in a jiffy, right? So you look at it, but don't pay too much attention, right? Just give it no more importance than a lot of this actually truly deserves. Okay, so that basically, what else? Is there anything else I want to? Yeah, I think that's probably all that I want to cover. Just to give you a quick introduction to some of these companies and then get you acclimated to what their prices are, how they have done over the last 6 months to a year. I think we just looked at a year, not the 6 months, but at least you got an idea. And then looked at one of the financial metrics. Now, again, forward P ratio is just one. You want to look at the PS ratio, you want to look at the earnings per share, you want to look at their actual earnings report and understand the numbers to the extent you do understand and make decisions based on that. So it's your decision, not somebody else telling you. But every bit of information does help. Just don't be biased by what you hear or read, including what I'm telling you, obviously, right? So that's it for now, folks. Talk soon later. Bye bye.